Welcome to the Daily Update, where I'll go over the action in the market for Wednesday, October 18th, and then we'll see how things look for Thursday, October 19th. We're starting to see some weakness come in. We had an increase in volume on a down day. We're starting to lose support. We're turning back more negative in the short term. We worked off all of the extreme positive conditions that we had. We're just shifting a little bit in the intermediate term, but there's still some positive things that we can latch onto. There's been another rise in interest rates, and that is really putting a big amount of pressure on stocks. And we have the whole geopolitical situation in Israel, which is having an influence on things as well. Let's go back and talk about what happened. We did have a lower open, and prices fell below S1 at 43.43. As the day went on, we fell down to the August 2022 high, and it looked like we were just going to bounce up off of that. We tested that a few times last week successfully, and then we're able to come up out of that. Well, we bounced back up to S1 in Wednesday's session, but then we turned and went back down and actually broke below the August 2022 high. We fell down to S2 at 43.12, and then we closed just slightly above S2. So we were down 1.34% on above average volume. Our technicals are shifting a little bit, and I'll go through all the charts here. The geopolitical events in Israel are starting to have a bit of an impact. There's something happens over there and each side is blaming the other side, and information is a little bit lacking. You have people with their own agendas on one side or the other, and it makes things a bit cloudy. The concern could also be that we're really going to escalate. This could turn into more of a regional conflict, and that could really be negative, just not only for the stock market, but for the world. What are some comments that we can make? Rising interest rates are putting pressure on stocks. Small and mid caps, which did really well on Tuesday, well, they didn't do so well on Wednesday. They're just bouncing around like a ping pong ball right now. The micro caps are also hitting another new 52-week low. They were down. On a short-term basis, we still have one chart, the intermediate version of the short term that we look at for the stochastics. That's still extreme. We're turning down with the other ones. And then the current scenario, the same one that we've been dealing with. Do we have a stronger than expected economy, and that the Fed will have to keep rates higher for longer and possibly even raise rates? Keeping an eye on the Chinese economy. They're adding stimulus there to hopefully help things. The whole situation going on in Israel, keeping an eye on oil prices. And then earnings are starting to come out, and you get a big company that's reporting, and that can have a real influence on prices. The dollar was up and interest rates were also up. The 30 to the 5 is back to being normal. The other yield curves that we follow still are inverted. And they haven't updated the fear and greed index at the CNN site that I go to for a couple of days now. The last reading was at 35. It would not be that hard to imagine that this sentiment is actually dropping at this point. We're still not trending. The ADX is below 20. It's below its moving average. The red line is on top, so we would default to negative based on these charts. And I've changed our bias to negative because we had another down day, and our momentum is mixed to negative. Where we had been leaning more positive, now we can't help but lean a little bit more negative. We could still get that back. We could have a good solid up day and things could show some improvement, but the fact that we're losing support is of concern. Excuse me. The economic reports that came out, we had the weekly MBA mortgage applications index. It was down 6.9%. Housing starts came in at 1.358 million, a little bit less than the 1.380 million they had expected. Last time they came in at 1.269 million. Building permits came in at 1.473 million. They had expected 1.448 million. Last time it was at 1.541 million. And I have some charts to show you here. This is a 3-month average of the housing starts and building permits. The starts are in blue where they're decreasing, where the building permits are going up. So that could be somewhat positive. These tend to be leading indicators of the economy. The gold line going up, yeah, that's okay. But what is a concern is that the starts are really starting to go down. Looking at this on a month-over-month basis, where we did increase over the previous month, And then looking at the mortgage applications, we were up 0.6% last week. We're down 6.9% this week. We're getting up close to that 5% level with the 10-year yield. We ended up settling at about 4.90%. That's well above the 4.02%, and that's why stocks are under pressure. Here's the intraday chart where we did have a lower open, where we kind of chopped sideways. The market didn't really know what it wanted to do for a while. Well, eventually we broke down to S1, and then we stayed along this for a bit. We came down. This is when we tested the August 2022 high. We bounced up off of that, but we couldn't really get above S1. Then we came back down, kind of sort of tested it again. So you think, okay, maybe we're going to be off to the races now if we start going back up. Nope, we came back up to S1, started to fall. We ended up going down below the August 2022 high, down below S2, and then we just closed a little bit above S2. Looking at growth versus value, and this is one of the positive signs for right now. Growth did do better than value, where the blue line is still above the red line. They were both down, but growth was down less. Here's the ratio where we look at for the S&P 500, where it was actually up, where growth did outperform value. We've been seeing some weakness, which was giving us a bit of a warning sign. We're wondering now on a down day that this is showing some improvement. Is that something positive? And then looking on an end of day basis, we're continuing to break out here. That could be positive. We have been in an uptrend and we're starting to break out above that. So that could be something more positive to hang on to as well. Looking at our trend, though, the ADX is below 20. It's below its moving average. The red line is a lot more clearly on top now with the green line on bottom. So we're in a non-trending situation with our intermediate term. We're also not trending in the short term with the red line on top, the ADX and the moving average all below 20. We're wondering if the middle part of October, are we going to have some kind of a washout here that will send the VIX higher? It really is kind of acting a little bit strange. The equity put call ratio is kind of acting strange too, that I'll show you. But historically, what has happened is we've come up into about the middle part of October, topped out with the VIX, and then overall tend to decline from here. That would be positive for stocks. The Ulcer Index really was unchanged, even though we had a down day, but fear is decreasing according to this measure. Here is the VIX, where it did spike up a little bit on the line chart and the bar chart. We got a little bit above 20, but then closed down below 20. But volatility is starting to pick up. When we look at the VIX of the VIX, it's well above its moving average and going up as folks are getting a bit more fearful. The VIX to VVIX ratio continues to advance. That is negative. And this is interesting, where the 5-period moving average of the equity put call ratio, after topping out, it's now starting to go down. It could be starting to register some more of these previous readings that we've been seeing. So we'll want to keep an eye on this, not make a decision on this, but the fact that it's going down is positive for right now. The equity put call ratio longer term continues to go up. That's negative. And our other fear engage that we follow is going up. And I haven't showed this in a few days. The risk on, risk off ratio is back to declining now. That's more negative. And we're getting close to another signal with the mass index. We're coming up to the dashed red line. When a signal will be generated is if we continue to go up to the blue line and then turn and then come back down over the dashed line. That will be a signal. We had a signal back in late August into September that really didn't help us all that much because the market was going down and then up while this signal was being generated. So it's like, okay, this is supposed to give us an idea of a reversal of whatever direction the market's going at that time. Well, in August and September, it was going down for a while and then up. So which one do we pick? It really didn't help us. We'll see. If we do get another signal here, will that end up helping us? Looking at the advanced decline line, we're turning down, but still above the moving average based on price. We also showed weakness based on volume, and we're below the moving average. We did see an expansion in new lows. We're still doing okay with our 5-period and 10-period, but we did see some new highs, but it's well off of what we had been seeing. The advanced decline ratio is turning more negative. The blue line and the red line are just barely starting to cross below the midpoint. Actually, the blue line is still a little bit above where the red line is a little bit below. Accumulation distribution. This can still be taken as somewhat positive. Even though we're turning down, we're still above the moving average. If we drop below that, that will be another warning sign. And the Chaikin money flow continues to be more positive and has been trending and looking a little bit better. So that can be seen as positive. Here's the daily chart where we close down below the long-term trend, and that's negative. And on the bottom, you see where volume did go above average. And volume is starting to pick up a little bit again. We're above the zero line. The force index is now switched over to negative. And here's our stochastics, where we're no longer extreme in the short term. We're still extreme in the intermediate short term, but starting to turn down, rolling over a little bit after we had been improving in the long short term. Here's our 20-period double and triple exponential moving average study. We're dropping below both the green and the blue line. That's negative. And we're starting to come down again here to the simple moving average for the 20 period. This is acting as support right now. Can it hold on to this and bounce up out of that, or are we going to lose this short-term moving average support? The cumulative NYSE advanced decline line did show some weakness. We also turned down with our NYSE regular advanced decline line, and we're just on the midpoint right now with the Bollinger Bands. It's always kind of interesting how we end there. The Swenlin trading oscillators looking more negative. Even though it's above zero based on price and volume, we are declining, and we're just about ready to go negative based on volume. The go, no-go system is switched back to dark purple or a deep purple, smoke on the water look there. The TTM squeeze, this is a momentum oscillator, and it's continuing to look more positive. The balance of power declined, but is still above the midpoint. We're also falling below the midpoint with our highest high, lowest low value chart. That's never a positive sign. We're flattening out with the blue line. We remain flat with the red line. The vortex is still positive with the green line on top, but it is declining as the red line's coming up. The ease of movement still above zero, but starting to turn down. The bullish percent index did decline after giving us some pretty strong positive signals there after crossing back above 30. This is really the first day of weakness that we've seen. The NYSE McClellan oscillator has now dropped below zero. That's more negative, broader term. We're still advancing with our summation index for the S&P based on price and volume. And if we stay below zero with the McClellan oscillator, we're going to start to turn down with the NYSE summation index based on price and volume. We've switched over to negative for the Elder Impulse system for the S&P. We're dropping below 50 with our 14-period and 9-period RSI indicators. We're also falling further below the moving average with the on-balance volume. This is where we're starting to lose support. This 100% retracement was the August 2022 high, and we closed down below that. Now, we've been down here before, and we're able to come back. Is that going to end up happening this time, or are we going to continue to see more weakness? We're also falling down a bit below the 61.8% retracement level with our longer-term fib chart. We did fall below this before. Are we going to come all the way down to the 50% retracement level? Are we going to be able to build a base in here and then go back up? The market is trying to figure that out currently. And we're also coming close to this 50% retracement for the NASDAQ, where we had been getting quite a ways above this. Now we're starting to come back down. The Copic curve, though, is still generating a buy signal, as is the Pring bottom fisher. On a momentum basis, we're still positive. The PMO, both based on price and volume, and the indicator itself remain positive. We're no longer extreme with the PMOs that are rising. We're turning down a little bit with the buy signals and turning down slightly with the PMOs that are above zero. The NYSE bullish percent index did tick down, and we're still below 50, so this is looking more negative. And the NASDAQ 100 bullish percent index, it's still above 50. That's positive, but we're starting to see this decline. On a momentum basis, our slope oscillator in the short term is still positive. The MACD rolling over a little bit, but is still positive. And across the board, we still continue to be positive, but it can take some time for these indicators to shift. The 50-period moving average study, we had been dealing with the exponential moving averages overhead resistance. Well, now we're falling down below that. And then looking at our double and triple exponential moving average study that we have here, we're coming down to the red line, which is the triple exponential moving average. That could be providing support right now. We bounced up a little bit off of that. If we see more weakness, we could fall down below this. The 100-period moving average study, we were right in between the exponential and simple moving average. Now we've dropped below both, and that is showing more weakness. and we're starting to fall back down here into the 20 period moving average with our moving average tree. And after we had been chopping sideways, it would have been nice if we could have actually broken out and look more positive. Instead, it looks like we could be breaking down. Doesn't mean all hope is lost. We have support down below where we're at now that held before, but are we going to go down all the way to the 200-day simple moving average this time? We're dropping below the midpoint with our standard deviations chart. We're turning down, but still positive with the Chaikin oscillator. Also turning down, but positive with the money flow. Getting close to turning negative with the ultimate oscillator. We're still negative with the parabolic SER. We have not seen a dot on top yet. If we see more weakness, that could change, but it hasn't changed yet. And we're dropping down into the middle part of our mini rainbow with our 20-period simple moving average of the open, high, low, close. Sometimes this will act as support and we'll be able to bounce up out of this. We're dropping below the longer-term trend line, as I pointed out earlier, and that is not a good thing. But we've been down here before. And if we start to really fall, are we going to come down to this other green trend line? The special K is right on top of the red line. It still isn't quite sure what it wants to do. We did see a decline with the Dow. The transports are kind of going down more right now, and that's not positive. The utilities, after bouncing back up slightly, have been showing a little bit more weakness. And I've been pointing this out. This is a longer-term setup and remains in the background. For much of 2023, the Zohorchak method was giving us a buy signal. Now it's starting to show some weakness. And here's the S&P to utilities ratio, which had been going up nicely. Now it's starting to pull back. The 10-day average of the S&P 500 highs minus the lows after getting extreme was showing some improvement, but now we're starting to pull back slightly. And looking at the 19-day exponential moving average of the advanced decline ratio, after getting extreme, we're still above the midpoint based on price, but we're starting to fall below the midpoint based on volume. Here's the microcaps, which are now setting another new 52-week low. The Heikin Ashi is turning back more negative. The Kegi it's probably hard to see, but it's turned red and it's pointing down. That's more negative. We're looking more negative with the Renko, but we're still positive with the 3-line break. The equal weight did see some weakness on Wednesday, and it's still continuing to underperform the S&P 500 weighted index. When we look at our ratio between the two, when I showed this chart yesterday, I said, oh, the fact that this fell, that could be positive. Well, on a down day, and we're seeing this fall, I think that turns things back more negative. The Dow has dropped below its 200-day moving average after recapturing that. That is negative. And the diamonds have switched to negative after being positive. The NASDAQ 100 was above its 50-day moving average. We closed below that, and we're slightly below this pivot line. So support is being lost here. And we've turned to negative with the Elder's Impulse system. The momentum is still positive, but starting to roll over for the PPO on the NASDAQ 100. The NASDAQ itself did lose support here. We closed down below this pivot point. We were never able to really get above the 50-day moving average. The small caps, after having a really good up day on Tuesday, well, they tanked on Wednesday, and they're working off of a recent death cross. Also for the Russell 2000 small caps, recent death cross, below 50 and declining with the RSI. The MACD is still positive, but starting to roll over. We're wondering, are we going to come back into this mess of previous support? We've been able to bounce up out of this before. Will that end up happening again? And the Elder Impulse system for the small caps went from being positive to negative. The mid caps generating a death cross and looking more negative. Here's the negative sign for the mid caps on the Elder Impulse system after having been positive. The FANG index finally dropped below its 50-day moving average. Longer term, it's still in an uptrend, but losing the support is rather critical. And longer term, we're still above this longer-term trend line going back to 2009. Now, we're getting pretty close, and if we see more weakness, we could drop below this. Looking at growth of value, the Qs are showing some weakness when compared to the S&P. Discretionary is causing us a bit of concern. We've been underneath the moving average, and the moving average is declining. We also saw some weakness with large cap growth versus large cap value. Our growth to value ratio showing weakness with the large, mid, and small caps. And with the small caps, we're starting to drop below the moving average. After showing some improvement with our 50-day exponential moving average of the new highs, new lows, we're still ticking up because this is a pretty slow indicator. But when we look at the black line, we dropped down below 0 again. So that's not going to help the 50 period moving average in red to begin to turn back up and go higher. Looking at the 50-period moving average of the S&P 500, after going extreme negative, we were showing some improvement, but now we're starting to fall back down. And this is a broader measure with the Amex, NASDAQ, and NYSE, a 5-period moving average of the highs minus the lows. We continue to be below zero. That's broader range negative. The dollar continues to go up and still is in an uptrend. The financial sector, after getting back up to its 200-day moving average, well, it fell down below that. And we're coming now into the new cycle, this 50-day cycle. Is this marking some kind of a change? Are we going to end up continuing to go down from here? Are we going to chop sideways? Or somewhere along the line, are some of these positive things going to kick in and actually get us to go higher? This is interest rates on the 10-year, and see how they're really spiking up. We're up into the 4.9 range. And so when interest rates go up, that means price goes down. We're seeing weakness with the ETF for the 7 to 10-year bond. We're declining with the RSI. We have a recent death cross, and the MACD is crossing over negative. The 30 to the 5 is still, it's coming down, but it's still back to being normal. And this is a chart I've been showing when we compare cash to the 3 to 7-year bond ETF. This just shows that there's a lot of uncertainty and some fear when it comes to interest rates when we see this ratio really going up. That just means cash is outperforming bonds right now. And then here's another look at 1 to 3-year bonds and comparing them with 3 to 7-year bonds. The fact that this is really going up, that produces more fear about interest rates because folks are getting into the shorter term bond ETF because they're afraid that longer out interest rates are really going to go up, and there's more uncertainty with that. And so they're choosing to get into shorter term maturities. And we're seeing that same thing when we look at the TIPS, which are Treasury inflation protected securities. When we compare it to the 3 to 7-year bond, the TIPS are not doing all that great. In fact, they're underperforming. But when we go and look at TIPS versus the 7 to 10-year bond further out, we can see the TIPS are really outperforming right now. We look at the US 10-year yield and subtract the German 10-year yield. That's continuing to go up as the dollar's going up, and the correlation between the two is quite strong. Here's Tom Bowley's research, where staples tend to be weak, financials tend to be hot, not so much now. We're still in this middle part where we should be seeing a nice little bounce before we enter into some weakness. And then at the end of the month, we might see some strength historically. So what's our outlook for Thursday? The UAW strike is still continuing. They still haven't been able to select a new Speaker of the House. Jim Jordan went down for his second vote. Now they're going to decide, are they going to try to get everybody together and rally around him, or they're going to go and pick somebody else? And it's really kind of a mess right now. The whole Israel situation, it could be escalating. Let's hope it doesn't, but we have to be realistic at the same time. The technicals are turning more negative and showing some weakness, and we are dropping below support. We will get the weekly jobless claims, the Philadelphia Fed Index, existing home sales, and the leading economic index or indicator will be coming out. So this is going to be rather influential with the reports. And then we're keeping an eye on the geopolitical events, with Israel pretty much at the top of the list currently. Here's the updated calendar, where on Friday we will get the Treasury budget. Stock Traders Almanac for October 19th, we're neutral to positive across the board. Not by very much, but we're into the 50s here. And we are in a positive historical options expiration week. So we have that going for us on a historical basis. We will be on the 14th trading day of the month, where if you look at the dashed line, that's the S&P during a pre-election year. We do see historically some kind of a bounce, where if you look at all of the years together, this is when we start to see some weakness. So we're still wondering, what part of this chart are we in right now? Are we coming into the weak part? Are we going to turn around and see a little bit more of a bounce from here for the S&P? The Carson research also suggests that we might see some weakness going into the end of the month. Here's the NASDAQ, bounce and then some weakness, and the S&P, bounce and then some weakness. And we tend to be a little bit more positive than negative, going back to 1950 during a pre-election year for the S&P 500. Looking at Bitcoin, really not getting that much of a bounce here yet. Historically, if we stick with the green line, we were up, actually we were down a little bit. We're just dancing along its 50-day moving average after giving us a recent death cross. And yeah, it's trying to poke its head up higher, but it's really not hanging on to anything right now, at least the way folks were hoping, I'm sure. So our scenarios, not going with the down scenario, not going with the up scenario. We're leaning more towards the sideways scenario because both of our ADX charts are showing that we are not trending right now, but if anything, we would default to the negative trend. The warning signs, the longer-term equity put-call ratio continues to go up. The risk-on posture is showing weakness. The 50-period new highs, new lows, exponential moving average study, it's continuing to be negative. The Russell and the small cap index are now working off of death crosses. The positive signs, the special K is still right on top of the red line. It hasn't decided what it wants to do. The equity put-call ratio for right now is going down, and that could be positive. Our oscillators are still positive, but could be showing some weakness if we see more follow-through. The parabolic SAR is still positive. The BPI, even though it showed some weakness, is still going up overall. The Copic curve and the Pring bottom fissure have generated recent buy signals. The vortex, even though it's coming down with the green line, it's still positive. The Staples to S&P 500 ratio is declining, even though that's pulling back right now. And then the S&P to utilities, which is what I showed you, that's going up overall, which could be supportive, but we've been pulling back over the last couple of days. The mid caps, they really are in the process now of triggering a death cross. Small and mid cap growth, believe it or not, we're still chopping sideways and we continue to be positive. The financial sector, also working off of a golden cross, it's gone back below its 200-day moving average. That should be negative there. So our conclusion, we're turning more negative, we're not trending, and we're starting to lose support. In the short term, we're turning negative now. Intermediate term, we're just showing weakness and starting to lose support, or we're still positive in the long term. Thank you. I hope you found this helpful. This is a real confusing time for the markets right now as we're really shifting around and chopping sideways. You've got a lot of indecisive folks. You've got the folks that really think we should be going up from here, and then the folks that are really convinced that we're going down from here. But I hope you still have a very good day, and I will talk to you in the next video.